Rural development, an integrated concept of growth and poverty elimination. The soul of India lives in its villages, so said Gandhiji nearly 100 years ago. Today, India is among the fastest growing economies in the world. More than 50% of the population lives in rural areas. Rural India has indeed changed. But to achieve real progress, it is essential to ensure that rural India develops and is on par with urban India. A quick look at various causes of rural hardships. Rapid population growth, lack of capital, lack of alternate employment opportunities other than agriculture, excessive population pressure on agriculture, illiteracy, regional disparities, child marriage tradition, indifferent attitude towards investment, lack of proper implementation of public distribution system. Let us try to understand crucial aspects of rural India vis-à-vis the credit system and agricultural marketing system. Agricultural market system. Agricultural marketing is a process that involves the assembling, storage, processing, transportation, packaging, grading, and distribution of different agricultural commodities across the country. Peculiar characteristics of agricultural produce: bulkiness, perishability, wide varietal differences, dispersed production, processing needs for consumption, seasonality. A quick look at the various types of rural markets. Hats, Sundays, weekly market for all commodities. Mandis, for all types of commodities. Commodity specialized markets. Regulated markets. Cooperative marketing. Let us take a quick look at major challenges faced by the rural sector. Underdeveloped markets and underdeveloped people. Agricultural technology has not spread uniformly throughout the country. Farmers with small holdings have been unable to take advantage of new technology. Various dialects throughout the region. Languages and dialects vary from state to state and region to region. As a result, the development of a standardized distribution system becomes very difficult. Major losers: small and marginal farmers. Many farmers are illiterate or semi-literate, Hence, they face difficulties like proper paper procedures for getting loans and insurance. These farmers face high interest rates for their credits, local money lending system. Many of them are also not aware of the various schemes offered by the government. A few suggestions, recommendations for sound agricultural marketing in India. Rural banking. Rural financial market development is a complex process. The All India Rural Credit Survey Committee AIRCS 1954 forms the edifice for the policy towards the development of the institutional credit structures. Priority sector lending, lead bank scheme, services area approach, setting up of NABARD are some of the outcomes of the repeated scrutiny of the system. Evolution of rural banking in India. Cooperative credit institutions, commercial banks, regional rural banks, national rural banks, Reserve Bank of India, NABARD, Kisan credit cards. Some startling facts. According to researches carried out by the Reserve Bank of India (RBI) on all India basis, 59% of the adult population in the country has bank accounts and 41% don't. In rural areas, the coverage of banks is 39% against 60% in urban areas. There is only one bank for a population of 13,000. But the problem is that banks have not been able to reach a vast majority of the rural population. The rural poor have limited access to organized, affordable and transparent financial services such as savings, loans, remittances and insurance services, etc. It is important for them to have access to banking services, especially credit and insurance, to enlarge livelihood opportunities and to empower themselves to take charge of their lives. The unorganized sector of lending is believed to be acting as a problem to the growth impetus in these sectors. In several villages, farmers still go to traditional money lenders like zamindars for meager sums of a few hundred or thousand rupees and get entangled in a debt trap for their entire lives. As a result, farmer suicides, bonded labor, Naxalism and political and social unrest are abominable features of the rural economy. What is microcredit? Microcredit is the extension of very small loans or microloans to those in poverty designed to spur entrepreneurship. These individuals lack collateral, steady employment and a verifiable credit history, and therefore cannot meet even the most minimal qualifications to obtain traditional credit. Microcredit is a part of microfinance, which is the provision of a wider range of financial services to the very poor. How does it work? In the past few years, savings-led microfinance has gained recognition as an effective way to bring very poor families low-cost financial services. A quick look at its functionality. Microcredit is a financial innovation that is generally considered to have originated with the Grameen Bank in Bangladesh. The United Nations declared 2005 the International Year of Microcredit. In India, the National Bank for Agricultural and Rural Development, NABARD, finances more than 500 banks that on-lend funds to self-help groups or SHGs.
Thus, we can conclude
SHGs are small, cohesive and participative groups of the poor who pool their thrift regularly and use it to make small interest-bearing loans to members and in the process learn the nuances of financial discipline. Subsequently, they graduate to access bank credit to augment their resources for lending to their members in need of financial assistance for meeting their credit needs. Over the years, the pooled resources of the SHGs become a sizable corpus which, complemented by higher volume of bank loan, enables them to take up livelihood activities. Some facts. How does it work? The ripples. One success story is about 3 particular groups of farmers in western Maharashtra who cultivate exotic vegetables. Weary of waiting for government intervention in marketing, they took the initiative some years ago to sell their produce directly to bulk consumers and hoteliers. When these groups from Pune, Ahmednagar and Solapur made a success of their direct marketing venture, they caught the attention of the World Bank, which was interested in exploring alternative marketing techniques for agricultural produce. To the bank's query as to what they required, the farmers who had been beseeching the government for a long time replied, "Provide us access to finance, cold storage facilities and markets." They asked for further reforms in terms of more transparency in the working of the APMCs and more involvement of private sector players. Why is rural credit important? It is important to remember that poverty was not created by the poor, but is rather a result of the socio-economic system. It does not reflect any lack of capability, desire or effort on the part of the impoverished. The most important step to ending poverty is the creation of employment and income opportunities for the poor. Credit is essential for the creation of instant self-employment, since it provides the investment that leads to small businesses and income for the poor. All human beings, including the poorest, are full of promises, and the poorest are entitled to credit and loans to begin their lives.